Okay, let's start this session number 2 for this semester of financial accounting. So if you have not written down or schedule yet, please copy it. Especially for the first week of August, this is the current one, okay? And this is the correction to our syllabus. The date on the syllabus is different from this, but this is the current one. So I changed it a little bit for the first week of August. Alright, so write it down. And for today we have a homework, so please write it down. The homework for today is on the 6th edition textbook, the page 198, the number M like Mary 4-6. And if you don't have the textbook in your hand yet, please borrow one from your classmate. Alright, because I'm not responsible to send you the copy, so would you please just copy from your classmate. The due date is 1 week Sunday from today. They will be on this June 24th, Sunday, 6 p.m. And as I mentioned to you from last week, I highly prefer you have your oral presentation. It's around 5 minutes oral presentation, and you post it on YouTube. And then you email to me. If you check YouTube, you can find a couple of the sample from our former student. Okay, the click rate is not too bad, much higher rate than my posting. And you can see that CalMat Financial Accounting, couple hundreds click on that, so you can just get a flavor, get a sense what kind of oral presentation. You can make it as fancy as possible. Alright, and I think this is good for you. Try to improve your oral presentation skill, experience. It's a nice thing to try it if you never tried it before on YouTube. Hopefully you'll get very popular and famous. Alright, and then write it down on the right hand side from the board, and that is very fundamental. That's a very, very fundamental tool you're gonna need for the whole semester. Right? 5 elements for the financial accounting course. Okay, always keep that in your mind. Always keep that in your mind. From the balance sheet, you will see assets equal to liability plus equity. So there are 3 elements appear on the balance sheet: assets, liability, equity. And then on the income statement side, you will see revenue and expenses. And as I mentioned to you last week, the most difficult or most confusing terminology for the financial accounting world, that is debit and credit. Those 2 words, very, very confusing. Just remember what did I explain to you. In the financial accounting world, debit means not debit. Credit means not credit. Alright, so debit, credit, they are not the regular meaning. In the financial accounting world, debit only designate to the left side of T account. Right? Credit only designate to the right side of T account. That's all. Alright? Debit only designate to the left side of the T account. This means T account. Alright? And there is no any guarantee debit will reduce or negative. By the same token, credit does not promise you to increase. Alright? You need to keep this in your mind. Debit only designate to the left side of the T account. Credit only means the right side of the T account. There is no any connection negative or positive, reduce or increase. The next step will link to reduce or increase. Okay, the next major word for the assets, increase always enter into left side. That means debit side. Reduce always enter into right side or credit side. Then if you keep this in your mind, you will control almost everything. You will hold on everything. Because liability and equity, they are on the opposite way. Because when you see the equation, assets equal to liability plus equity. So if the increase is on the left side under the assets, the increase will be on the right side under the liabilities and the equity. We will see so many examples for today. Don't worry about that. I just want you to memorize this in your mind. Then we're gonna apply this principle all the way through today. We're gonna see it. So assets, liability, equity, those three elements, they appear on balance sheet. All right. Then we talk about the second one is called income statement. That's revenue minus expenses. And the revenue is the same side of equity. That's the one way, easy way to memorize it. Because whenever you have revenue, really mean you're gonna increase shareholders' interest. So that's the same side. Then, if this is the same side with equity, then expense is gonna be the opposite way of revenue. So you will see coincidentally you will see it's the same way like assets. Even though there's no any connection between assets to expenses, however, they are on the same way to enter into the debit or credit. Always say increase or decrease. So you just keep this in your note, in your memory, in your mind, then we're gonna apply this principle all the way through today's example. Okay, I need to go one step back. Okay. The title of this course is Financial Accounting, right? As I mentioned from last week, financial accounting is not required for regular business. If you just start out your own business, as long as your business is not public, as long as your company is not trading, is not public company, that really means your stock of your company is not traded on the open market. You are not required to prepare financial accounting. So financial accounting is eventually is regular by the SEC. Anybody know SEC? Security Exchange Committee, right? So as long as your company is not public company, financial accounting is optional. Anybody know there is another course under the name managerial accounting? Even though we are not accounting major, so we don't care about that. If any of you is going to major in accounting, you need to learn that. But since for this program, accounting is only one of the required course for you. Anybody know what's the difference between financial accounting and managerial accounting? What's the major difference? Yeah, Justin?
Managerial accounting would be more internal controls.
Okay.
Where financial accounting is more for outside people looking in.
So everybody heard that?
Yes.
Okay, so let me repeat it. If in the future you heard about anybody mention to you managerial accounting, and there's a major difference between those two courses. For this course, financial accounting, the report, like a balance sheet, like an income statement, are prepared probably under the guidance of SEC or GAAP or whatsoever. We'll see more government agency. Prepared those financial statements for the outsider. Let me ask you, who are the outsiders? Give me example. Investor, stock shareholder, right?
Yeah.
For those people, they want to make a decision on the Monday morning, see any stock they want to buy, they want to sell,
Brokers.
right? The brokerage, right? So they rely on financial statement that is under the guidance of financial accounting. So we have shareholder, we have the brokerage. Who else? Who else could be the outsider?
Creditors.
Creditor, lender, bank.
Yeah.
Those people, they want to make a decision whether or not they will approve the loan to a company, right? Who else?
Auditor.
Auditor. We'll talk about auditor very soon. Who is the auditor? Who could be the auditor? Who are the auditors?
IRS.
No, IRS is not auditor. Auditor, we have a special meaning for auditor. Auditor mean CPA firm. CPA. Okay, accountant, they come in to examine your financial booking to verify whether or not those numbers they are true. All right. Who else? We have a shareholder, we have a bank, we have a government, we have brokerage, we have a accountant, CPA firm. Who else could be? Outsider. Okay. Compared to insider, manager. Who will be concerned about your managerial accounting? Who? Who is the insider?
CFO.
CFO, CEO, director,
Board of Directors.
anybody work within the office. So follow this guidance, you heard about, I probably heard about this, inside trading. Anybody know what's inside trading? By the way, inside trading is illegal. Very, very severe penalty. So follow this philosophy. What is inside trading? What is inside trading? Anybody know? I bet you heard about this, right? Almost everybody heard about this. From news, from movie, from TV, from novel, from story. I bet you all heard about inside trader or trading. So I just tell you in the first place, inside trading is illegal and coming with a very severe penalty. Maybe put in the jail.
Treating you public upon the information from inside.
Yes, very close. Okay. So say you are either employee or the officer or manager or any people within this company. Before your company release the news, financial news, doesn't matter good news, bad news, and you sell or buy your company stock in order to get the benefit, in order to get financial benefit. That's called inside trading. Say for example, you work for so-and-so company, which is public company. By the way, if your company is not public company, there is no such issue inside trading. You are safe because nobody gonna buy your stock anyways. Okay, so first of all, your company is a public company. Then, according to the current SEC regulation, any public company must routinely file quarterly report. This is number one. Number two, your company is required to file any real-time report if there is major news. Say for example, your company is a pharmaceutical and some of your patent gonna be revoked by FTC. Is FTC or It's FDC, right? Food and drug, right?
Yeah, everything.
If any patent of your pharmaceutical product gonna be revoked for any reason why, the patent, and that's big news. If this news really happen, you must file the real-time report to SEC right away. And then you, before your company release this news, you are the officer or you are the employee, you just sell your stock on the market. Why? Because you anticipate once this news release, the price of stock will drop. So before the price drop, you sell your stock right away. And the opposite way is, your company, say like HTC or Foxconn, you just sign out the agreement with any major, like Apple, like HP, any major manufacturer or well-known company, just sign out one contract. Again, you need to report the real time right away and release this news to everybody. However, before you release this news, you just buy a lot of stock from the open market because you anticipate the price will increase right away after you release. Or this kind activity is called inside trading. And you cannot imagine how many acquisitions every year being filed by the SEC. Okay, so before we begin for today, we need to talk about what is auditing, because some people mention auditor. What is a major job for one CPA firm? So can you imagine what is a major job? There are big four major CPA firms in the United States. Other than those big four, we have so many middle-sized, small-sized CPA firms. For those people, they pass CPA. What is the major job for them? Can you imagine?
Tax return.
Tax return,
Audit.
auditing, what else? Bookkeeping. I would say three major things, okay? Three major things. One is bookkeeping, but usually they don't do that because there's very, very low-end product. You can leave the bookkeeping job to anybody without CPA license, as long as they know how to do the bookkeeping. They know how to use the software. So the very low-end job is bookkeeping. Usually the big four, probably they don't do it. And the number two is taxation. They file tax return. And the number three is the major thing, auditing. Because auditing is only authorized to CPA. All right? For tax return, you are not necessary to become CPA. If you pass the state level exam, even you pass the federal level, IRS level exam, you get the license, you can file tax return. Even without the license, you can file tax return within the limit.
How about corporate tax return?
Yes, same thing. You can just file by yourself, file by the employee without any license. However, in order to do the auditing, to become the auditor, you must become the CPA. And auditing is required for every public company. It's required. Quarterly report, any report. Even though it is not required for private company, however, in order to prove your financial statement is really accountable, really trustful, some of the big company, even like the school like this, okay, the school like this is not public. However, in order to make the financial statement more accountable, trustful, and this school, usually we will have the CPA coming in once a year to audit our financial statement. So let me ask you, what is the auditing? What kind of auditing job is?
What kind of work? Make sure that was
Auditor coming in to spend a whole week, 2 weeks here, with your accounting people to see what?
Full numbers, everything.
To see everything. Very, very tedious. You don't like it, okay? If you're the person really like the number, you can do the auditing. Because the auditor coming in to sitting here, sitting with you from 8 to 5, 9 to 5, sitting here and check line by line, number by number. That's auditing. Sitting here, even though auditor, they don't do the bookkeeping. All right, the bookkeeping job is done by your accounting people. All right. However, when the auditor coming in, they sitting here for 1 week, 2 weeks, sometimes even longer. All right. Nothing else. Sitting here to check your bookkeeping, the information in your book, line by line, number by number, and they pick out the error, the mistake, the problem, the questions. They raise whatever they could. They will challenge your accounting people to see, is this number really right? Can you enter these expenses here? Can you do this? Can you do that? And the number is not right and correct it. Headache, tedious. All right. So that is how auditing should be.